Most of the bank account holders and their nominees or heirs do not have information related to non-operative bank accounts and unclaimed deposits. When a customer or any third party does not make any transaction from a savings or a current account for 2 years, then that account becomes inoperative, that is dormant. You cannot do any transaction from this account. Similarly, if a fixed deposit is not claimed within 2 years of its maturity, then that too becomes inoperative or dormant. If these accounts remain inoperative for 10 years, the balance amount in them is transferred to the Depositors Education and Awareness Fund (DEF) of the Reserve Bank. The government launched the Udgam portal last year to help people find out such bank accounts and the balance in them, but it did not achieve much success. For this reason, the Reserve Bank has now issued new guidelines for banks so that the situation regarding such non-operative accounts and unclaimed accounts in them becomes clear. So it becomes easier for people to claim and the risk of fraud is reduced. The need to issue new guidelines also arose because the banks had categorized all the accounts in which money was stuck as inoperative accounts and termed them as dormant accounts. Now, all these accounts will be reactivated under the new rules. Now, all these accounts will be kept activated for 6 months. Account holders will be traced. If no one claims even after 6 months, they will be closed and their money will be transferred to DEF. These guidelines will come into effect from April 1. The Reserve Bank has asked banks to annually review those accounts in which transactions have not taken place for more than a year. Besides, it has also been asked to review those term deposits, that is, fixed deposit accounts in which no clear mandate has been given regarding renewal and money has not been withdrawn even after maturity. The Reserve Bank has also stopped banks from imposing penal charges for not maintaining minimum balance in an inoperative account. Apart from this, now there will be no change for activating an inoperative account. Under the new rules, banks will have to inform their account and deposit holders through letter, email, or on their registered phone number that there has been no activity in their account for the last 1 year. Along with this, they will be warned that if there is no activity even in the extended period of the next 1 year, then those accounts will become inoperative accounts. Even after this, if the customer is not alerted, banks will have to trace the account holder or his nominee or heir. Inoperative accounts can also be reactivated later after updating KYC. Apart from this, to reduce the risk of fraud, banks will have to regularly monitor such inoperative accounts because there is a danger of people associated with the bank committing fraud with the unclaimed amount lying in these accounts. Now, banks will not allow any kind of debit transaction in an inoperative account unless the customer himself activates the account. Banks will also ensure that adequate steps are being taken to prevent data theft and misuse for fraud. Also, banks will have to display on their sites or branches every month the details about unclaimed deposits which have been transferred to DEF. At the same time, banks will also have to provide information about the process of activation of inoperative accounts / unclaimed deposits and how to claim the balance in the account.